Thanks very much indeed. Good afternoon, everyone. Hope you've enjoyed your lunch and everyone's still awake. Delighted to be here. My name's Dave Gardner. I'm a partner in the tech team at TLT, and we're very proud to be sponsoring this event and delighted to be back here with you in the room. I've got a very distinguished panel here to talk about payments and whether or not they've got easier, how far that's a good thing or a challenge, and the issues around safety, fraud, and other issues. So look forward to doing that, and without further ado, I'll just allow each one of the panel members to briefly introduce themselves. So if I could pass over to Laura first of all.
Absolutely. So I'm Laura. I'm co-founder, along with my sister Holly, of Financielle. So Financielle is a female-focused financial wellness app that helps predominantly women, but actually all genders, take control of their money so they can feel more financially well.
Great stuff. And Nicola, if I could ask you to say hi.
Hi everyone, my name's Nicola Weedall. I'm the co-founder of Hydr, which is advanced invoice payments for SMEs, so a new form of invoice finance that has been designed with a fully digital onboarding process, automated underwriting, and trying to reach a market that is desperately in need for working capital solutions.
Good stuff. And Andy?
Hi, I'm Andy, founder of Payful. We're a payments risk technology, and we help businesses predict the risk of not getting paid on time.
Excellent. And last but not least, Gareth.
Hello, good afternoon. I'm Gareth Cleverley. I'm the Director of New Business and Learn for Dacxi, a digital asset cryptocurrency exchange and learn platform. In a nutshell, we're here to demystify cryptocurrency and make it the understanding of the technology behind it and why it's useful, and will be part of everybody's lives in the near future.
Very good.
Whether you like it or not.
It's coming. So, as you've heard, we've got quite a diverse range of businesses here, and we're going to talk about people making payments, the different ways in which you can do that. But I thought we'd start at the opposite end of the telescope and focus on the issues around receiving payments, where we've got both Nicola and Andy who can talk to that, and some of the challenges for businesses around delays they may face, credit risk, manual processes getting in the way of payment. So I wonder, Nicola, I'll start with you and tell us a bit about what Hydr does.
Yeah, so Hydr offers advanced invoice payments for SMEs. So when a customer of ours generates an invoice and then it is subject to payment terms, which is a pretty standard process to go through in the UK, we pay within 24 hours of creating that invoice, and then we go ahead and collect that invoice when it's due from your customers. And what that does is it allows the SMEs to be able to, well, obviously spend the money that they've earned, move on to the next project, pay staff, whatever else it might be, but most importantly, frees up a hell of a lot of time that comes with chasing payments. There is an inherent problem with that in the UK, late payments, and often people that avoid late payments by extending payment terms, but paying on time at very extensive terms. So we eliminate all of those things, especially for the SME space. And I think that, just to kind of answer your question about that, it is a very labour-intensive process, and a lot of businesses, big and small, don't get into business to chase late payments or any kind of invoice. And we're just trying to switch that on its head to make the whole process very, very easy.
Fantastic. And Andy, from your perspective, looking at what Payful does, you're coming at a similar sort of problem from a slightly different direction, looking at data analysis and how can you take away the pain of assessing creditworthiness?
Yeah. So in the B2B environment, there's a lack of transparency around payment behaviours. It's really, historically, it's been really difficult to access data, and it's one of the reasons why credit reference bureaus don't report on it. So we built Payful to basically plug that gap. We live in a world of abundance of data now, and we literally, through APIs, collect and connect all of that data and then produce a score around sort of payment performance. The reason why we exist is literally, like Nicola, to eliminate late payments. They're as prevalent as ever, literally killing businesses day after day. But there's not many of us doing anything, apart from us two, to really solve it. So yeah, we take a different approach. We look at different data and we help businesses understand whether or not the businesses that they're dealing with are the right types of businesses to deal with.
Fantastic. And then moving to the opposite end of the telescope in terms of making payments, there's never been more challenges around how consumers and businesses need to choose how to make payments, need to think about the issues in their own lives and their own financial condition. I think that comes across when we look at both the macroeconomic climate with the fallout from COVID with issues now facing us all, with cost of living crisis and increases, technology changes, meaning that you've got to choose carefully how you pay and when you pay. And I thought I'd turn to Laura, if I could, just to ask a bit about, first of all, the general backdrop for people making payments. You know, what are you seeing from your perspective in business, and how that's presenting challenges to people who need to make payments?
I think from a consumer point of view, for a long time, we've needed digitization and we've needed digital transformation in businesses. You know, the fact that it could be so frustrating to some things you'd have to pay check and cash for, and you just want to make the payment quickly. Then what we saw with COVID is a lot of businesses had to invest in this kind of improving the payments process and collecting payments from customers, giving them options. I think we've even seen that with bank branches shutting and the post office being the place that you go to do everything. And so actually consumers are helped by this innovation in payments. The problem is when mistrust comes into the environment, because so much is digital and it is remote and it's not face to face. The number of kind of payment scams we've seen during COVID and post-COVID have just been huge. You know, the HMRC bounce back loans and post office and bank ones have been around for a while. So I think we've just got this balance at the moment between people having to be really careful with their money. Every penny matters, every transfer matters, and we need to make it as easy as possible as businesses to accept payment. But we have to think about the consumer at the other end, and that there's varying levels of technology expertise and vulnerabilities depending on where they're at kind of in their own financial well-being.
Yeah, I think that's 100% right, because from a business perspective, it's great to be able to give people more options to pay, to be able to do things quickly, improve your conversion rates, and make sure you retain more customers on a transaction by transaction basis. But then, are those the right decisions for the customer? We talked before about good friction before we came on the panel here. You know, is there a point about people finding it too easy to make payments?
We did. I mean, is this where I can mention buy now, pay later? I think
probably the elephant in the room, isn't it?
There could be some people in the room that work for buy now, pay later, so do not worry. It is an enemy of mine, but as a collective. But frictionless payments is kind of, if you think about where Apple's at right now, Apple have just come out with their own buy now, pay later product, which means you can tap and get into credit more than ever before without even needing a financial institution connected to you. And friction is great for the customer. So if you're thinking about your user workflows and your e-commerce sites, and you getting the customer through the funnel, especially for something they want and need, in as easy and as simple a way as possible. You know, there's whole teams built around this kind of thing. But actually the downside to that is them knowing what they're signing up for. And I shared with Dave a story 10 years ago. It even happened then. I accidentally bought a swimsuit on credit. I needed it in a rush. It was £19. It was, I can remember the price. It was from Next online at the time. I don't know if people like Next were big on their store card and they were always trying to push it, but I was not someone that used credit. Long story short, it nearly stopped me from buying a house, a £19, because I had no idea that I'd bought it. They were chasing me with emails, but I thought they were trying to sell me more stuff, so I was just ignoring them. And the frictionless checkout was so unapparent to me as a consumer that I'd missed it. Research now shows us, even 10 years later, 1 in 5 buy now, pay later payments from a customer, they don't think they're in credit. They don't realise they've even used one of these brands. It's just been put right at the top of the checkout. So I think what we're passionate about doing is educating consumers so they understand different products, whether it's credit or whether it's cash. But also the onus is on companies to make sure they're just on the right side of trust. You know, are they trying to help this customer? Is it going to help the customer? Or actually, is it to catch them out? Because most businesses in this room are built on repeat business and customer loyalty and doing right by the customer, and sometimes credit's right for the customer. But making that process invisible is not necessarily always right. So regulation is going to come into that in the next few years as well.
For sure. And I think that's something that we often consider as a consumer-facing issue, because we need to think about, as buyers of goods and services ourselves, how that journey works. But to your point, it's really an issue for businesses as well, because if they want that repeat business, they want to be seen as a friend to their customers, and some of the issues that we talked about in the retail panel earlier on come in again here, then you need to make sure that the way in which you're setting up your journeys makes it easy to buy, but also looks after your customers.
Yeah.
So I think that's it's a whole piece around education and making sure people are aware of the different options out there, which is probably a neat segue to talk to Gareth
what you did there.
about a whole new front in terms of payments and payments technology around crypto, blockchain applications generally, and the work that you're doing to help businesses understand their options in that space.
Sure. I'm just happy that the word scam was used before you got to the crypto guy. Thank you for that. I appreciate it. So you've got to be light-hearted when you work in the crypto industry, especially at the moment. So what we're trying to do is we're trying to pioneer the ability for businesses, big, small, doesn't matter the size, every business needs it, to understand the benefits and also to demystify the negatives the headlines out there about, it's volatile, et cetera, where, crypto as a form of payment, i.e. using blockchain technology to receive and make payment, kind of answers a lot of the problems that you guys have been talking about so far already. I believe in friction payments in terms of anti-money laundering checks, know your KYC documentation, that nobody's allowed to create an exchange wallet with us until that's all done and dusted. And, we do PEPs, I think everybody in this room knows what PEP is and things like that. So, all that happens within the crypto world, but nobody really knows about it. They just think that, anybody can do anything and it's the dark web and it's all weird and wonderful. But what we're trying to do is allow businesses to understand how you can do it, how it can work for you, how it can be quick, effective, cheaper. Cheaper is probably the biggest question here. I think there's factually over $1 billion was spent on a transaction using an exchange and it cost less than £1. If anybody in a traditional finance structure can make a payment for that less cost, then I'd be happy to have a chat with them individually. But we get a bad rap. What we're trying to do is demystify, make people understand blockchain technology and the benefits of it. And it doesn't have to be volatile. There's already stable coins out there that have no volatility and no risk to your business. And the bottom line of if you receive £50,000 as an invoice in Bitcoin, there's a possibility the next day that might be worth £20,000. Or it could be worth £70,000 the next day. But that's something as a business owner in the past that I have been as well, is that I really wouldn't want to do that with my bottom line of my revenue source of my business. And there's no need to do with crypto. And we're trying to make people understand and walk them through it and hold their hand. We've provided quite an in-depth learn platform that's free to use for businesses, individual retail clients, accountants, IFAs, anybody that needs understanding around crypto to either better serve their clients, better use their businesses. We've pioneered that as much as we possibly can, as well as tax-efficient routes for business owners to utilize cryptocurrency for their own benefit.
Sure. I will just bring you back to scams, just briefly. Apologies for doing that.
Cheers.
You knew it was coming. The Advertising Standards Authority has been upholding quite a few complaints around how crypto is marketed.
Couldn't agree with them more, yeah.
I was just going to say, from your perspective...
Yeah, that's another thing, it's a bugbear and a thing that I hate, makes my job harder. The idea of having an advertising board say, buy this and become a millionaire overnight, it's just absolutely ludicrous, isn't it? We are all for regulation. We, as a business, we are on the round table of the FCA trying to educate them on what crypto and blockchain is and how it should be regulated in the near future. I want it to be regulated because it makes my job easier. Yeah. Institutional money, businesses can get involved in it a lot quicker. It ticks that box. But I fully agree. Nobody should be talking about anything that's not factual within the crypto world. Yep. And if anybody is, then run away very quickly. Yep. Would be my advice.
Probably very good advice indeed. Yeah, and I think that's quite interesting what you say about welcoming regulation. Sure. I think from a lot of our clients' perspectives, that's not always what we hear, but actually I probably hear that more from fintech clients than from any others. Yep. Because for those who've got reputable businesses, they see it as something that demonstrates their credentials, enables customers to trust them, going back to that trust point again. So it kind of gives you a point of difference from someone who might not be so reputable.
Yeah, when you're signing up a large company to utilize, our wallet functionality to receive and make payments in crypto, due diligence is key. And if we got a tick from the FCA, then I don't have to do any work. Yeah. But at the moment we haven't, and we've got to encourage them. We've got to meet them and see the whites of our eyes and shake their hands and spend 6 months basically building up trust, which is fine, and we're willing to do, and we do. But if we can just get a little stamp, it makes my job much easier. So we're all for it.
Absolutely. That makes sense. And just in terms of the broader issues around scams, around things like authorised push payment fraud that we've seen in the market and the responses to that, I guess interested from your perspective, Laura, in terms of your business and how you see that affecting your customers and the ways in which we see to try and mitigate and prevent some of those issues? Because it's a massive problem, isn't it, from a payments perspective?
It really is, and I think, a lot of finance is a utility. Every single day we're making payments, and a lot of the people in our community are learning to balance a budget for the first time, or they're saving up for bigger ticket items, whether it be like your first big trip or buying a car for the first time, or even buying a house. That moment when you're considering whether you transfer money to the solicitor. I mean, like, I go back to my legal days and I kind of say, never put the word like house deposit in an email. Change your passwords 12 times, because we're just, I am aware not everyone is. And so I think we need to, the more awareness we can get out there for consumers about ongoing scams, about things to watch out for, about security on websites, like where you should be putting your money, where you shouldn't, and trying to use these safer methods of transferring money, the better. We're always going to have scams. We're always going to have the scammers one step ahead. But there is a real duty of care on companies to make that process, and banks and fintechs especially, but make it as safe as possible for the user, because we're all, I think I said this before, but we're all at different levels, and we have to, support everyone at all levels of understanding, and not just presume that people send big amounts of money, pay big gas bills every day, because they really don't. A few of us are paying it a bit more nowadays, aren't they?
Yeah, absolutely. I think there's an interesting piece there around how far technology solves those problems and how far people need to be educated as well, because something like authorised push payment fraud, the fact you've now got confirmation of payee when you're making your mobile payments, so you can check that I wanted to send this payment to Laura and it's not come up with some other name or some other business. Yeah. That's obviously a massive technology assistance there to people. But I still think there's a huge education piece around how people using different payment systems and different payment methods they might not be so familiar with are doing that effectively, and are doing that in a way where they really understand how it works.
I paid an invoice the other day. Don't tell Hydr that I paid an invoice the other day. No, it's the other way around. I was paying via Starling, and actually, some of the questions that it was really hard to get this payment to the consultant we were using. Some of the questions were so helpful. It was, do you know, is this first payment? Yes. Do you know that? Have you met them in person? I'm like, who's met anyone in person nowadays? Like, no, I've not. And it says, do you have an invoice you can upload? And you can upload all in the app. It didn't preclude the payment flow, but it was helping me think as a consumer, okay, you're thinking I should just not send this, however many pounds over, you're telling me I should be checking. And I thought that was a great innovation. I've not seen that on any other banking app before, but that's kind of checks and balances that didn't make me feel scared, but that made me think of some common sense things. So that's a form of education in itself, just in the workflow.
Did you pay it on time?
I did, on the same day. Only because I'll forget, like it'll have gone, and then I'll be a late payer and I won't pass your test.
You get a bad score otherwise.
Fantastic. Yeah, and I think that's a good example, isn't it, of good friction. Not to sort of single out Starling, other online mobile banks are available, but you feel like Starling's looking after you. You don't feel like it's stopping you doing what you need to do. It's actually helping you make the right choice.
And blaming me later and going, well, it was your own fault.
Yeah, and there's a limit. That's why I say I think there's a human education piece as well, because there's a limit to how far you can hold someone's hand, but you're thinking about the transaction that you're making. Doing that in a sensible way.
We face the same thing every day at Hydr now with customer payments, because one of the things that we have to do is, instead of that customer paying our client, they're now going to pay us instead. And we have to go through that same level of rigour in terms of getting their debtors to pay us direct.
Sure.
So we get that, who the hell are you? Why are you ringing me asking me to change the bank details and make this £10,000 payment to you instead of to the customer that I've been dealing with? And it's a good process to go through, because it's nice to see that businesses are educated enough to want to be able to challenge what they're being asked to do, because that's what we do, and what we ask debtors to do is the absolute optimum way to fraud people.
Yeah.
So it's
and how do you manage that in terms of, again, that sort of helping people to go through the journey and making sure that that's something that works from your customer's perspective, but has got a slick process behind it?
Well, it goes down to the invoice, the bank details on the invoice, and that invoice has been generated and sent to them by their customer. But part of our process is that you have to introduce the debtor to us as well, to let them know you will receive a call, an email from Hydr, these are not scammers.
Yeah.
All the things that you're told to do when don't open attachments, don't do this, if you don't recognise it, that's exactly what we do. So we go for the opposite side of that kind of education piece. But it's nice to see that people are responding that way, because it makes them, you understand that they're looking after their own business as well.
Yeah, absolutely. Good stuff. I should have mentioned at the outset, but I'll mention now that Slido is open. So if anyone's got any questions as we go along, do feed them through, and I'm very happy to ask the panel either during the course of the conversation or at the end of it. So just let us know, and we're ready and willing to take your questions. I thought I'd zoom out just a little bit from the details around payments and talk a bit more about fintech and your businesses. And maybe if I could ask you, Andy, from a Manchester perspective, given that's where we are today and we're all delighted to be back in the Lowry again, what makes Manchester a good place from your perspective to grow a business and to develop a fintech specialism?
Definitely the people. So outside of London, Manchester is regarded as the largest fintech ecosystem in the UK, which is a great thing. But yeah, there's an abundance of great people with a wealth of knowledge in the area, in financial services and technology. And it's those people that help our businesses exist here. We certainly wouldn't exist if those people didn't exist. So yeah, great people make great businesses, in my opinion.
Yep, agreed.
So choose Manchester.
Do you agree with that, Nicola, as a Manchester-based business, or is there anything else you'd draw attention to?
I think I definitely agree on that side, and my co-founder's from London, and he has this term which is quite appropriate, which is that Manchester is a village, and it is that sense of community. It's far easier in a smaller place, coming from London, obviously, as he does, to realise that we all kind of know one another. And I think just the North in general tends to have a more friendly vibe about it. So everybody's happy to help each other. And I think when you start any business, the most important thing is your network and being able to leverage everybody else's expertise, because, you're not a fully fledged business and you should be able to rely on one another. And we do have a very friendly place where people are very open to sharing.
Yeah, absolutely. I think, and that's borne out by some of the work that we do with Pro Manchester and the FinTech Committee, where it's often flagged, the criticality of talent, as you say, being able to access the right people. But I think that's not just employees, that's also a network of advisors, of supporting casts of characters that help your business thrive. Yeah. And through what Pro Manchester does, that really brings together the people who are working in this space to be able to work collaboratively.
Yeah, definitely. And I think also as a result of COVID, one of the great things to come out of there is the ability to work remotely and have people in different locations and extend that network now across, not even just the country, but the world. It's become the norm to have, 10 meetings in one day, which, it wasn't before COVID.
Yeah, absolutely. And I guess before we turn to questions, let's ask one final question and open it to the panel. We've heard a lot this morning about businesses becoming more omni-channel, about various issues with being able to get the most out of your data, the challenges of different macroeconomic factors, to use that phrase again. From your perspective, what's the key challenge for your business over the next 12 to 24 months? What do you think's on the horizon that's most in focus for you?
So I'll start.
Go ahead.
The headlines in our industry cause just fear, uncertainty and doubt.
Yep.
If you read the article, it's actually the headline is not actually in the article 9 times out of 10.
Sure.
But that's just clickbait. That is what it is. That won't change for a good 2-3 years within our industry, in my opinion. It's the fear around what it's all about and the lack of understanding. Hence why we've really pioneered to make the forefront and the first entry point to crypto with us via the Learn platform. We actually don't allow people to buy unless they've been through some of the Learn education material that we provide. We don't have to do that.
Yep.
We do it because we think that people should understand. It's the same as anything. You buy a car, you buy a house, you're going to go and kick the tires or, check there's a kitchen in there. Crypto should be no different. You should understand what you're buying before you buy it. And at the end of the day, these are the currencies that we offer. We don't offer everything. We offer a very tailored 15 coins specifically because we feel that they're investable asset class. They are businesses that have billions of dollars worth of revenue. And it's about making sure people get to the point where they're willing to take the time and understand that before they make a decision without any knowledge. So for us, it's about the uncertainty and doubt about the marketplace overall.
Sure. So one other contribution there, in terms of any key challenges?
I think for us, the macroeconomic situation is great because we help people learn how to budget, take control of their money, pay down debt, start investing for the first time, and actually in any market, that's a good thing to have. One of our challenges is cutting through the noise, and our consumer is predominantly a female. She's aged between 25 and 50. She's got a lot on her plate, and there's a million things to look after: herself, others, family members, friends. And so for us, it's cutting through the noise of, not necessarily Love Island, we can go alongside Love Island, but that kind of, there's so much distraction. How can we convince her to take control of her money, set things in motion, and then kind of have these automated systems so that you can live your best life? And that's our challenge for the wider investment market and journey market. I think we're all in a really good place in our journey because tech is taking quite a hit at the moment at the top, and we're all early enough stage businesses that this is a great time for us to be kind of rebuilding and getting our product perfect and reaching people without much risk.
Excellent. We've had some really interesting questions, and I'm going to apologise in advance because we won't get through them all in time. One here that caught my eye: does current regulation help or hinder making online payments safer? And is more or less regulation needed? Does anyone want to deal with that hot potato?
You.
Well,
Is that me? I don't know.
No.
thank you. Well, in the crypto world, it actually makes it harder. Like I said, that stamp of approval from the FCA, not that they protect your money from an investment anyway, which is an argument I have on a daily basis with clients.
Yeah.
That stamp of approval would make our job and our life much easier. So for me, me personally, our company, and everybody I speak to within the crypto world, we can't wait for regulation to a degree to come in. Mm-hmm. There is an element of the decentralization, which is one of the strengths of the cryptocurrency, kind of then going out the window, but I don't think it will. At the end of the day, most of these coins now are controlled by a CEO or somebody at the top. It's really only Bitcoin that's the decentralized currency of the world. Everything else is a business. And the currency is the shares within those businesses like Ethereum and so on and so forth. So for me, I can't wait. Fingers crossed. I've never thought as a salesperson or a director of sales I would ever use the word regulation and great in the same sentence because it's normally a hindrance, but I genuinely can't wait, and fingers crossed within the next 18 months it will be there for us.
Yeah, understood. And just, I guess that leads on to another question here, which touches on open banking, and is open banking succeeding in its objectives of giving consumers more clarity and control over their finances? So that's a good example of where regulatory intervention has been very difficult for the financial services industry to accommodate, and it's been a long time coming in terms of developing those technology solutions to allow us all to use account information and payment initiation services, which people probably don't realise they are using. Coming back to your point about, do you know you're using credit? I think similarly, you don't often understand that you're using open banking rails to do things. It's something that was touched on at the Fintech North Payments Conference, which is in Manchester earlier this week, where one of the architects of the open banking implementation entity was talking about how open banking has been a really bad brand name for them because it sounds scary to customers. Banking shouldn't be open, it's my banking data. When the message it's trying to get across is something quite different. But I think the actual underpinning technology still hasn't been fully realised, but will be imminently. And when it is, there's a whole load of further solutions that will come out building on top of that basic infrastructure. And as you can see from Treasury and Bayes, they're already looking at the open banking platform as something to move into open finance, open data, and give customers more control over all sorts of different data in their lives. So I think it has set a very useful starting point and platform that can be leveraged.
I think it's
sorry,
quite
Nicola,
important. I was
do
trying to
apologise.
jump in there.
Yeah,
Sorry.
go ahead.
I was just going to say, I think it's quite important though, because just for Hydr alone, the fact that we have access to open banking is what allows us to do what we do for a space such as the small business space, who tend to have a less structured finance team tend to have less time available to be able to, comply with what a traditional invoice finance provider would do, and it's that allows us to give them that service in a very streamlined, neat way. So I think it should be used with the right intentions, but everybody that is signing up to any form of open banking through APIs should be making sure that they educate their customers as to what it is, because that is the absolute first point of friction in our entire onboarding process. When a customer is about to connect their bank account, that is the bit where we see the most pause, and it's just everybody's still at that point, and they should be. It's a good place. You know that people are looking at it in the right way.
Yeah, and it's that point, isn't it, of explaining at that juncture, this is a point of friction. You should think about this.
Yes,
but I'm going to explain to you in a transparent way why this is a good thing.
Exactly that.
Open banking is a good thing, definitely. I mean, there's 5 million users now of open banking in the UK, but it'll also help clean up products like buy now, pay later. When those products become regulated, affordability will be a huge thing. And Apple, for instance, they recently acquired a London-based fintech, Credit Kudos, and they paid 150 million for a startup. And the reason why they did that...
Did they shut it overnight?
No,
they
just integrate. So they integrated Credit Kudos' open banking technology into Apple Pay.
Yeah.
The team literally transferred into Apple Pay overnight. And then the buy now, pay later product was literally announced a month later. But the reason why they're doing that is because they're taking credit risk seriously, because they know that regulation is coming. So, I don't think buy now, pay later is actually a bad thing either.
That's a different panel for a different day for Andy and I.
There's some positive use cases about it, but we're just not there yet.
Yeah, and so from a financial perspective, 85% of products are fashion and beauty. So that use buy now, pay later. So it's not like the emergency washing machine and the shoes and stuff. And actually buy now, pay later in emerging areas such as South America and Africa is massive for the consumer, and it's very, very helpful. So no, you are absolutely right. On open banking, just very quickly, what is interesting is people, I don't like the word, it does sound mistrust. The irony is that people trust then the bank that holds on. I mean, I remember when the current account switching service kind of came out, the fact that you could transfer in 14 days and people couldn't comprehend that was going to be a thing, because you just used to staying with one bank forever and they look after you, was actually, they were not all looking after you, and was really good. So yeah, the more people that get on open banking, but the better people understand about it.
It's giving the customer back control of their information. That's the openness about it. It's not supposed to be about passing it to anyone and everyone.
Exactly.
Buy now, pay later is also good for the economy.
Yeah.
It allows people more spending power that they haven't got in their bank accounts. It allows them to go out and shop and do things, and it drives the economy forwards, which is what we need kind of right now, isn't it?
True enough. So I think we're going to have to draw the line there, because otherwise Sam or Nicola or someone will drag me from the stage with a shepherd's crook. And we'll have to have an open banking panel next year and talk further about this stuff. But thank you very much indeed to my panellists here. It's been a really interesting conversation, and thanks to Pro Manchester again for organising the event.
Thanks, Dave.
Thanks for listening.
Thanks, everyone.
Ogres, sticklers for time, I'm afraid. Thank you so much, everyone. I especially enjoyed a couple of things in there. Choose Manchester as one of them, and the wonderful plug from Dave actually about Pro Manchester. So if any of you aren't members of Pro Manchester and you want to know more about Pro Manchester, little Don over here